Good afternoon. Thanks for the introduction. Yes, my name's Richard Beaton, and what I'd like to do today is to talk about international payments and the ecosystem and how it's faster and easier to cheaper to send money. And we're going to talk about the reasons why and the key factor for succeeding in this space. We've only got 25 or 30 minutes, so I'd like to leave some time for some Q&A at the end. So what I'm going to do is I'm going to run down through the panel, introduce them, and then I'm going to have a nice general topic to get them going, and we'll take it from there. So in no particular order, the first name is Jonathan Quinn, who's CEO of WorldFirst. WorldFirst was formed in 2004, 700 staff and offices around the world. This year they'll move over $12 billion, making over 1 million international payments for 100,000 customers, 90% of which is B2B. They specialize in China, and for every $500 flowing into China, $1 is theirs. So it's a nice, good stat. Interesting company. Adam Molson, Chief Customer Officer of Form3 Financial Cloud. Form3 delivers cloud-based connectivity, payment processing, clearing, and settlement services. Again, their customers are a range of well-known, widely based fintech, leading banks, non-FIs. They're going to be introducing US real-time payments this year. They have to have a fully hosted pay-as-you-go, accessible through API model. Joe Maguire, who's Global Head of Sales from Airwallex. Airwallex is a fintech based out of Melbourne and Shanghai, backed by names such as Tencent, Sequoia, MasterCard, and Alibaba's Entrepreneur Fund. And Joe's words here, they're looking to disrupt the SWIFT and the cross-border payment space. In summary, think currency cloud of Asia. And last, we have Marcus Hughes. Marcus Hughes is Head of Strategic Business Development at Bottomline Technologies. I think we all know about Bottomline. They're NASDAQ-based US head office, tens of thousands of customers, multiple countries. Their cloud-based payment solutions enable you to manage your payments and cash management globally. They're introducing some faster payments again this year and are just about to provide similar connectivity for real-time systems in USA and Europe. So that's the introduction to the panelists. So again, the question was around the international payment system, and we all know about TransferWise and Currency Cloud making it easier, faster, and cheaper. We're going to talk about the keys of succeeding. First, international payments, it's a pretty broad term, and I think it sums up lots of different things. So just a general question first. International payments are not really the same, but if we can treat it as just a whole, just for this question, why do you think international payments has been such an area ripe for change? Joe?
I think that we have this system called SWIFT, and 11,000 financial institutions in the world are plugged into it. It's in every country in the world, and it does a really good job for high-value payments. But it has a lot of shortcomings when it comes to high-volume, low-value transactions. And so I think that it's been there, it works, every bank's plugged into it. They're kind of like the Illuminati of payments, SWIFT. So I think there's just this gap in the market where the banks have got a working product, so they haven't really been investing in this space for a long period of time, which makes it ripe for disruption.
And so what opportunity did you see with WorldFirst, Jonathan?
Specifically in relation to...
Why international payments has been such a market ripe for change?
Well, for me, I guess, I think people are more and more living, working, traveling, investing, and shopping internationally. So the sort of global funds flow of money moving around the world, to me, is just kind of constantly improving, both on the consumer side and on the business side. And I think we did feel when we started that wasn't being done very well, and I actually still think it's not being done very well. I mean, I could go into Amazon and I can press one click, and the product is somewhere in the background has been made in China. It's been shipped. It's been put to a center somewhere. It's then being brought to me by courier. And yet, if I was talking to an American customer recently, and he said he wanted to make a payment to China, just a wire transfer, and he had to drive to his bank and stand in line and pay $40 and 2.5% spread, and it took 5 days to get there. And he was sending the wrong currency. So, so that was the opportunity that got us here, and that's the opportunity still to improve on that.
Yes.
Well, I think certainly banks have made a lot of money out of international payments, so other organizations wanted to get a slice of that action, and to do so they have to make it more efficient, faster, simpler, easier, and that's what we're seeing at the moment. That's why there's a huge growth in FX brokers and payment service providers But it's an exciting market at the moment.
And what opportunity do you see with Form 3 Financial?
Yeah, we see a lot of changing aspects in the market. Knowledge base is massively different now to what it was just a few years ago. We've talked about Swift quite a bit. Probably wouldn't have heard about Swift at these kind of conferences in the past. Knowledge around technology and the availability of technology is changing massively. So incumbents in this space that have been in international payments for some time, probably going through big technology transformation. They have to keep up with demands of their customers, but also to make sure their products are profitable. And new entrants to the market are taking advantage of native cloud technologies, which is where we sit. So a number of major forces around people and technology, meaning that the space is up for change.
That information point is very interesting as well. I think if you go back 20 years, most people would have gone to their bank for all of these services, and there's now much greater awareness of alternatives, and there's a sort of trust around alternatives, which has been made possible by the sort of licensing regimes creating regulation that supports alternatives. And then I guess post-2008, there's been this sort of government drive in lots of countries to encourage competition, and so that's kind of created that catalyst for these businesses to create.
I think it's worth mentioning something about Swift here. So it is used for an awful lot of international payments today, and there was a perceived threat that blockchain, etc., would kind of close down Swift quite soon. Swift have responded very strongly to that, actually, and they've come back with something, Global Payment Innovation, which aimed at corporate customers who have the high-value payments, as we were saying earlier. And they've made a lot of progress in a short space of time. So there's a very positive outcome of this change and disruption going on in the marketplace, that even the incumbents are having to respond positively to make it more transparent, faster, more efficient, with service level agreements in place, using existing technology, which is scaled and tried and trusted, to produce better value for their customers.
I'd only add to that I think the reason why we're all on this panel in payments is because it's probably the easiest thing to disintermediate from the banks. They call it the 363 back in the day. You pay 3% on deposits, take 6% for mortgages, and play golf at 3 p.m. I think taking away the lending piece or the deposit piece from the banks is the hardest. Payments aren't as sticky.
Okay. So talk about competing with the giants and competing with the banks. So what have you guys, starting with you again then, Joe, so what have you got to compete with the giants in your industry?
So we are a cross-border payments company that specialises in those high-volume, low-value payments, and we've built out a network globally, or continuing to build out a network to provide local payout capabilities. So we're using the local payment network, like Faster Payments here, to ensure that for a transaction of, say, $80 or $100 or $1,000, instead of paying 4 correspondent bank fees to get that money from Indonesia to the UK, instead of having to have no idea where your money is as it goes through that process, each of the banks do their KYC, it's transparent, it's faster, and we can guarantee the amount that comes out on the other side.
In terms of your disruption, in terms of how you can compete and carry on, Marcus?
Well, I think it's important about one of the key things is real-time payments now. We want it to be immediate, we want it to be 24/7, so we will be building out where the capabilities are becoming available internationally. In the USA, as a good example, the clearinghouse are going live later this year. We'll be providing aggregator services into that. Same for Europe, there's a separate instant credit transfer arrangement where you're going to be providing fintech, challenger banks, and other banks with access to those systems. But also fraud is something that's ever present. So we're doing fraud prevention, identification and prevention, more predictive analytics in those solutions, definitely coming soon. It's an everyday challenge for everybody. So there's a lot of investment going into improving anti-fraud. I think there's also the physical and financial supply chain we brought together with payments and invoicing and finance. We're hearing about SMEs and farmers needing to get money and funding. Those suppliers can get paid more quickly as a result of information being available about the physical supply chain being available to support those financing decisions.
So, Jonathan, is this a winner-take-all situation for this market? Are we going to have multiple providers covering market segments? How do you view the future of this?
personally think in the short to medium term that there's multiple providers, because it feels to me like the market is segmenting into about 4 areas. There's the people that are building card-based services, which is more about travel. And then there's the people in the kind of remittance space, which are generally the sort of corridors where there's migration. And then there's people doing the sort of larger private client type businesses, and then it feels to me like there's the sort of B2B businesses. And probably everybody is in one and looking to go into more than one, but I don't think it's easy to see that one person is going to crack all of those. And there's people who've been talking about consolidation for a long time, but I haven't really seen that kind of spreading across that. So I think that there will become sort of sector winners in each of those segments. But I also think it's very hard to build brilliance in every market and to kind of crack every market. And if you do, you generally become very big, and then potentially you lose some of the agility. So I think we'll continue to see sort of groups of good businesses with, who crack the service, crack the price, crack the speed, crack compliance, and therefore, offer a good service with value and build some loyalty with their customers. So I no doubt some of the big chat platforms and the sort of Facebook, Apple, Google, etc. will want to try and get a bit of that. But I think that licensing may make that a bit difficult, and some questions around monopolies might. So I think we'll continue to see a range of businesses in each of those segments.
So we understand there's a different markets, different segments, and different technologies, and possibly different winning success factors for each one of those. Is this a race to the bottom, open to in terms of margin? Adam?
No, I would say that out of what Jonathan just covered, there's a couple of imperatives there that regardless of what area you're in, if you do it really well, you're going to be in a good place. So that's having really solid bank relationships, really solid correspondent bank relationships, really great technology and controls and processes around compliance, so that you can demonstrate that you've got a proper handle of where the money's coming from, where the money's going in, what the concentration of funds is to an ultimate beneficiary. I think these are really key things that bring a lot of credibility and trust to a business.
We're talking about payments, and normally when we talk about payments, you want to introduce new buzzwords and blockchain and distributed ledger and things like that. So it's not really about the technologies you guys see, it's about the regulation and about the compliance.
Yeah, demonstrating control. I think truly demonstrating control, that you understand as a business where your flows are coming from, where they're going to, what the money's being used for. And if you can't, then the banks that you rely on, you will have to rely on banks, will just shut you down. I mean, they just can't afford to make mistakes about servicing a bank account if their client isn't fully in control of what's happening.
I think that's a really interesting thing for a business to get right. There's two sort of parallel trends, and one of them is that more and more people want to use the service, and they want to do it as quickly and easy as possible. They don't want to have to sign anything. They don't want any paper involved. But at the same time, the other trend is that there's more and more focus on anti-money laundering and counter-terrorist financing. And if you can crack that sort of making sure that you're satisfying all these rules, keeping your banks happy, your regulators happy, and making sure you're not sending anything you shouldn't, but also doing that in as frictionless a way as possible, that's a skill which has some value in it to me.
Presentations talking about trust. Just a quick one, then, Adam, if you want to.
I think the KYC, know your customer, and the anti-money laundering is a really important area. It's actually a barrier to growth and efficiency. I mean, if somebody can crack that e-identity, if somebody can crack the KYC central registry where we can all get the information that's when you're properly permissioned, that's going to be really significant for the whole industry to go forward.
Joe?
I don't think it's a race to the bottom in terms of price. I think it's a race to convenience. So I think that the people that will crack this industry, I mean, the reason why it's so fragmented is because there's so much opportunity in the space. But I think the business that will crack it will be one of these big social businesses. It'll be WeChat, most likely, in Asia that does it first. And the reason why I think they'll crack it is they cover that KYC piece really well from the outset.
It's a possible link between social platforms and payments because it helps trust. Okay, we're just going up towards the end, so got a few minutes left. I'd like to open towards the floor for some questions and some answers. Answers from these guys, questions from you. Gentleman there.
I'll just speak up. And Joe, you mentioned race to convenience. Can you tell us a pain point that you think is still worth solving or no one has really cracked?
I think the whole concept of payments is still largely inconvenient, across all of the sectors that we talked about. If you could, I think WeChat is a great example of the future of where apps are going as a super app. So, 94% of Chinese nationals are on the app. They use it for over an hour a day. And they use it because everything they need is in that one space. So they've taken out the hassle of having to go to your bank, find out someone's bank account numbers, type that in and send it off. It's all instant, it's all peer-to-peer. And I think people are happy to pay for that.
I think the end game is actually getting it so that payments become invisible. They're just part of the transaction of buying. And if you don't think about it, so the Amazon example given earlier today, as you check out, you just pay, as long as you're all registered and properly KYC'd, etc. That's where it's going. Businesses will get there later, so corporate payments, but consumer payments have to get there soon.
Gentleman down there.
What exit strategies are you guys considering?
What exit strategies are you guys pursuing? Is what I heard. And Jonathan, you're next.
This is for me?
Yeah, go ahead, Jim.
Oh, sure. So it's a bit of a controversial topic, this exit strategy thing. Some of the VCs you speak to, if you have an exit strategy, will invest, and others will say absolutely not, because they want you there for growth and continued growth. For us, we have got some great strategic investors, Tencent, MasterCard. So we chose all of our investors not just for the money, but for partnerships and being able to leverage their network to be successful. So if we could be a part of that great network in the future, I think that'd be very exciting.
And Jonathan?
Yeah, I think it's a tricky question to answer in a sort of public situation, but my view has always been, as long as you think as a business you can continue to see a growth opportunity and you think you're the right person to deliver it, or as a business you're the right person to deliver it, I would kind of generally inclined to keep going, unless they reached a point where you felt there was some sort of strategic partnership where there was the 2 + 2 = 5 and actually conjoining yourself with another business, made sense. But I think it can be a big distraction, always kind of thinking about the exit. And I think ideally, if you build a sort of profitable business and you're therefore not reliant on constant stream of capital, that it's better to kind of make yourself a bit profitable, use that profit to fund your growth, and try and kind of grow as quickly as you can within your means, and then only really think about an exit if there's a sort of change in your ability to execute or strategic opportunity, or you cease to think you're the right person.
We have time for one more. Yes, gentleman there.
Hiya. So, question to Jonathan. How will you use open banking to disintermediate the banks, and where do you think is the easiest to hit the banks at for international payments?
Sure. So I guess for us, one of the big friction points for us is, so there's basically 3 parts to our business. There's taking the money in from the customer, transferring it to another country, and then paying it out. That middle bit is actually quite efficient. That first and the third bit is the less efficient bit. And open banking feels to me, and PSD2 and the opportunities for us to be a payment initiator is to me the opportunity to take a layer of friction out. So we've recently launched our World Account, which is a product where you can register and you get accounts around the world. And an evolution of that, which we'll hope to do early next year, is that you would be able to see your HSBC, your Barclays, your Lloyds account in there, and then you book the trade with us, and we can say, do you want us to initiate the payment from HSBC to us to cover that transaction? And if you can do that within our ecosystem or our platform, then that's taking away a big inertia point for us. So that's one of them. The second one, I think, is then our ability to leverage other products. So we're looking to build out our platform to offer multiple financial services to our customers, and that's about stickiness, but also sort of revenue, and also about making sure that we're relevant and we don't get disintermediated. And I think that the more those services are available as APIs, and therefore we can pull those in either from banks or from other third-party providers, the more easily we can launch subsidiary services to our customers.
Marcus, what do you, again, following on Jonathan, what do you think about PS?
I think what we will bring is multi-banking down at a lower price point to smaller businesses. So large corporates today often using SWIFT and other sort of quite expensive systems to connect with multiple banks and manage their cash globally. Open APIs beyond Europe and the UK, which is coming soon. You can see cities doing it, Standard Chartered doing it. So it is growing before the regulations. It's going faster than that, which is great. So just make it easier and simpler to offer multi-banking to lots of corporate customers with value add like reconciliation, etc. All the things that you'd add in money laundering and KYC and so on.
Do we have time for one more question? Anyone for any more? Okay, my question that I've got, Adam, it's one for you first, is where are we in this life cycle, especially with regard to international payments with the focus here, but where are we with regard to this life cycle of the business as a whole? Because Marcus said we started when consumer-based problems were solved first, with Amazon, etc., and now it's moving to the business space. But where do you think we are within the?
Well, focusing on our space, which is the B2B infrastructure side, we're on like day one. I mean, there is very little out there in terms of a bank decomposing infrastructure from the banking service. They've historically built up technology and needed that to provide to their customers. There's a few examples of other companies that offer clearing and settlement technologies, but there's very, very little out there. And that means that banks that want to focus on providing their services are encumbered by existing technologies, so it's difficult to break that over time. So that's why we're focused in this space, is really to offer that infrastructure as a service to any regulated firm.
Do you agree with that? Do you see it this way?
I think some economies are further progressed than others. So I think, if you look at Sweden or China, they're very far progressed down this roadmap. I think the UK, like Australia, like the US, are very far behind, and a lot of it's just due to the sheer, I guess, the displacement value that the banks have in the market. I think people really underestimate the value of displacing someone that's such a big incumbent in that space.
And how are we going to force that change to happen more quickly? What's one of the key drivers to make those changes happen?
I think the regulators are playing a serious role. So, I mean, if you look at regulators forcing central market infrastructures to open up, great. If you look at regulators actually competing on the world stage to become the fintech capital, so that's really good. I mean, that raises profile, but it also means that talk has to be followed with some action. So I think the regulators are playing quite an interesting role in the market dynamic.
I think the only last thing to add is I think the real winners from these open APIs are going to be the largest social businesses like a Facebook or a Google. It's not going to be the fintechs like us. I think this is the entry they need to get in and compete with the banks. Whether that's a good thing or not, not sure.
One last chance for any questions, and then I think our time is up. Okay, our time is up. Thank you very much.